we are confused about investing and trading. So today I'm going to talk about very few things about trading because and investment. With respect to the trading subject, I'm going to talk about how your trading should be improved and what are things must be followed to be a successful trader. Let's start then. First of all, let me write exactly what is investment. Investment is a process which aim for long term. If I directly go to Investopedia and ask what is the difference between investing and trading, there is a huge paragraph where it talks about what is investment and what is trading. Basically, investment requires some basic analysis, and with respect to time frame, it's a long term. When you are looking for returns, it's a long term objective and the focus. But trading is something different with respect to time frame. You can be a positional trader, swing trader, and day trader. I'm sure everybody is clear with respect to these terminologies, how we can use it. All right. Today, I'm going to talk about the importance elements of a trader. What are those? The first is you must have trade plan. Second is trading system. The third one is risk management. The fourth and the important one is trading psychology. Forgive me if any spelling mistakes. Okay, guys, to be a successful trader, these four things are very essential. And being a passive incomers club, we ensure that we are following these four steps. What is trade plan? Trade plan is something where it is going to make a rules that what you're exactly going to do tomorrow if you want to do positional trading or if you want to do intraday trading. So let me show you one trade plan. What we did it few days back. It's a positional trade plan. It says the priority and what is the risk reward ratio, what I am going to trade, and how I am going to trade. In case my trade goes against me, what are those things, and how much, what is my money management rules, and how I'm going to execute it. Right? It's perfect rules. For example, if any company, if you are working for some new topic, there are some guidelines to focus on. Guys, you must focus what you want and also identify your key areas. That is trade plan. And second thing is trading system. Most of the people running behind many WhatsApp groups, Telegram groups, YouTube videos to do a lot of experiments. Trading system should be simple to trade and must give returns. For example, I'm going to show you a live example today. Where is my Nifty? Okay, my trading system is something like this. I'm going to trade when I see hammer. So I'm planning to do positional trading. So or swing trading. I go for 1 hour candlestick time frame and I see whenever there is a hammer, I'll trade. And by this time, guys, you must be know what are hammers and patterns, right? So you can trade in a many ways, but I'm going to concentrate on the first way of trade is hammer. Well, that is one of the trading system I'm talking about. If I see hammer in my chart, and how do I going to execute the trade? That is the thing I'm going to talk about. If I look at Nifty, see here Nifty, it is the price pushed from this bottom to here. The opening of the candle was 10,263 and it moved till 10,079. Oh my god, 200 points. Again, it rised from opening to 262, 384, almost 100 points. Look at the graph, guys. If you're trading based on hammer, is it so difficult for you to trade? Just you have to take, after completing this hammer, you have to take the trade and your stop loss will be here. Yes, of course, this is a big candle and it's a very terrific day and the risk reward ratio is not matching. Of course, when risk reward ratio is not matching, and you should not take it because it's already in your trade plan. But identify here whenever there is a hammer, I'll trade if the risk reward ratio is matching. That's one criteria. Let me look at another few things. See here, if I'm doing swing trade, the perfect hammer. I don't define what is hammer and all now because we already understood. So if you don't know hammer, just Google it. Maybe in the coming session, I'm going to cover how exactly we can identify hammer. And are there any tool in live trading day to identify hammer? Yes, of course. That will be depicted in coming days. This is a hammer which happened in 1415. Since I'm going to do swing trading, I can take a trade here, keeping my stop loss here around 10,094, and here is the 10,125 is the entry point. And look at the how many points it has went from here. 10, 132, 233, almost 100 points. Again, there is a gap up, right? So this is a trading system. For example, I'm also going to add one more studies. For example, I'm going to make a one more trading system, moving average. I would say whenever 10 days moving average, which is exponential in nature, is a bomb trade. See guys, I'm going to make a trading system using moving average. My moving average system says very simple. Whenever the price moves above this, just trade it. That's it. And stop loss is just below that, just below this moving average. So how do I do that? Let's see. I'm going to combine two things to depict you clearly. What is that? I'll say my trading system should be like this. So trading system making hammer plus moving average 10 time period, right? That is the entry condition. So whenever I see hammer and it's above the moving average, hammer is above the moving average. So can you see here, one entry is more than enough and you will hold it till the cross of price. Can you see here the price? Perfect. I will take you, I will take this example. Time frame is 1 hour. I'm going to do swing trading and my position size and my position will be taken once the price crossed 10 time period moving average plus hammer. So there is a hammer and it crossed above, my stop loss is here and I always maintain risk reward ratio is 1 is to 2 is my risk reward ratio. And look at here and my exit criteria is once the price crosses here, I'm going to exit here. And if you keep on doing this, let us see again. See the price moved above but I'm looking for hammer and here is a hammer. So if you take the position here, the see here is a hammer and here is a hammer. So if you take the position here 10,213, look at right, and my exit criteria is here. Again I am coming here. So where is my entry? So I'm looking for hammer plus moving average price above the moving average. Here it is. So my short entry is very simple. Whenever the price moves below 10 time period moving average, that's it. See here what is happening whenever it price moves below. This is your trading system, right? And moves in a trend. And hammer here, you should take the entry, and this is a losing trade too, of course. But if you immediately reverse the trade, see this how it is moved from here to here. And hammer, but price crossed above here after hammer, and your position will be somewhere here, and you're holding it, holding it, holding it, holding it. Still, the price is not crossed. Yeah, here it is crossed. So you should exit here. So trading system is very simple. That makes you to focus on what you are going to do, and it minimizes number of trade. So I always request maintain trading system. So I shown you one example, but you can do n number of trading system either through hammer or some other patterns. For example, let us take some patterns too. This is another pattern. You can take combination of two candlestick patterns or combination of three candlestick patterns and doji. So these are the things which you have to consider to make a trading system. And second thing is risk management, guys. Whatsoever the trading system, whatsoever the accuracy, if you don't follow risk management system, then you're under trap. Your trading will not be successful without managing the risk management. How do I manage my risk? Very simple rule is position size. So what is position size? Position size depicts you that what is your maximum risk per trade to what is your stop loss. That will tell you what is your position size, right? If you know this, then more than enough. This is one of the simple risk management tool you have to implement any trade. Your system is good, your risk management is good, then you crossed 80% of the milestone. The fourth part is trading psychology. What is trading psychology? Basically, it is greed and fear. The basic thing is whenever the price is moving according to you, you'll exit because of fear, or you are going to hope for that your price the position will make you more profit than you expected. Both are both are not useful, or both are harmful for any traders. This is the catastrophic failing in trading world. What I would suggest is, if you have a system and position size, you automatically eliminate your greed and fear. So my suggestion is, guys, if you are a trader, make a plan and write down your trading system. Always apply your risk management system, then trade. That's it. And at the end of the day, you are profitable. And the coming days, I'm going to talk about investment. Whatever the profit you earn from trading must be keep it aside for investment. That's how we are going to create your wealth, but not from the trading. Trading is stressful if you don't follow these things. Trading is fearful if you don't follow trade plan, trading system, and risk management. Trading is miracle. So, and also I will urge you to do understand few things where most of the traders fails. These are the things why trading is not working for many people. They trade with huge positions, they trade based on newspapers, maybe somebody told you in WhatsApp group, or some telegram tips. Based on that, you're going to trade it. At the end, you don't know what you're exactly doing. And again, you don't concentrate on transaction cost. A smart trader always look at what is the cost. Brokerage is a simple one, but you should also look at what is your security transaction tax and other taxes. Training will not make you quick profits, but people look for quick profits, then that is a problem. trying to then the sixth one is every stock has a reason to go up and down on that particular day. The reason could be technical, fundamental, news results, but most of the time psychological. So don't trade until you are sure of any of these reasons. So you must know why the stock is going down. For example, if you look at Infi or when the CEO of Sicko is resigned, the stock, the dates it collapsed. See here, 10,118 to it came to 861. That day, especially on 18/8, yes, here it is. If I look at here, guys, look at 18/8, the price open is equal to high is also one of the trading strategy, I would say. When price is open is equal to high, you can go for a short, keeping this as a stop loss. And look at here, it moved down. The second it moved down, further it moved down. So you must know why it is moving out. People feel that when the stock is cracking 5 to 6% or 20, 17% it was down actually, but when it is 10% down, if you are trying to buy it, and you must know what kind of trade you are going to do. And to be particular, I would say when stock is more than 5 to 6% down, I'm going to trade it as an bounce trade, but my stop loss is very tight and very risky trade of kind. So, but I'm expert in that. I'm expert in not making profit. I'm expert in controlling my trades. So always understand this and trade. Trading on gut feeling is not good. Blaming luck, fate, and other people is also not good. So if you are a trader, so trading in a zone. Trading to trade vigorously every day when markets are sometimes struggling for direction is no trading zone. You must understand over a period of time what when to trade, when not to trade, and what is my position size and how much what is my trading plan. Without that, you could not able to succeed. Trading is a skill where you can develop with consistent effort and mentoring. Guys, I'm going to talk about mentoring today because mentoring is most essential part where your speed of decision making will be increased if you particularly do